Good morning. I'm back, bitches. I'm back. What? I took 3 days off, and look at what happens. This is the way to do it. Understand, we're going to go over everything. We're going to go over why the VIX was telling us exactly what was happening, why I was saying be patient, what the charts were telling us. We will go over how my newsletter probably protected you from a Tesla and Google sell-off. We will go over all the SPY stuff. We will go over small caps. I will go over absolutely everything and tell you where the markets are at and why I think we're going to see more of what we're seeing right now, which is lower highs and lower lows. I think that's the key right now, specifically in my portfolio, which is large cap tech. And, I've got some options out there that I'm looking at to try and limit the exposure a little bit. I was down 6 digits yesterday. It was not a fun day. But you've got, I talk about, there's in my personal life, I went through this change of looking at the bad things to try and looking at the good things. And it's called optimism versus pessimism. You can watch a bunch of videos on it, but it's looking at the glass as half full or half empty. The glass is half whatever, but it's either half full or half empty because it's right at 50%. I prefer to look at the glass as half full, not as half empty. The opportunity is still out there, but it's half full. So on days like yesterday, yes, it hurt to be down that much, but I'm up 7 figures in my portfolio, almost 7 figures in my portfolio year to date. So again, that 6-figure loss yesterday, it hurt, but it wasn't the end of the world. So understand, yes, there are protections that you can do. My portfolio and my guidance is perfectly straight, and I've been perfectly honest with you guys. And that's why I didn't put out a newsletter for the past 3 days or did a podcast. I want quality. I don't want just quantity. I want quality. And I didn't have time to do it. But now I have time to do it. I looked at this stuff. I'm going to give you my guidance, okay? I said it before that I think the Qs are going to act exactly like they did last year. Look at last year. Okay, this is May of last year, all the way over here on the left. April 26th, we had a buy, and you went on a run. Look at this year, okay? This is April 24th. You had a buy. We went on a run. After that run, it ended August 4th. We're ending a little bit sooner. That's all we're doing. And what happened? You went down, down to, and then you had another buy in the algorithm. If you want to look at this stuff and you like how this looks with the entry and then the exit playing in that middle ground, it's not timing the bottom, it's not timing the top, Trendspider is the way to go. Trendspider had you out at $480, $486 to be exact. It was at that support level that Trendspider said, hey, look at getting out. You lost confirmation. You could have gotten out at $490. You could have gotten out at $500. Where it didn't hold 500, and that handle of 5 was tough. It's really tough to hold. And you look at the MACD was crossing down. The MACD never gave you any indication it was going to cross back up. The RSI, it was trending down. We didn't break 50 until July 17th. That was 7 days ago. And the price was at 484 when the algorithm got you out. So if you like this 4-hour algorithm, it's not proprietary. I share it with you. When you sign up for Trendspider, you go to Linktree, linktr.ee/daily stock pick. It is down below. Continue listening because I will go over this algorithm a lot. That's what we're going to focus on. But that will take you to Trendspider. And Trendspider is $53 a year. That's your lowest price. If you need more expansion of tools, it's $98 a month or $223. This $223 comes with unlimited one-on-one training from Trendspider. Unlimited one-on-one training from Trendspider. So if you don't know technical training, technical analysis, they'll help you. They'll help guide you in the technical analysis. They won't guide you with you should buy this or sell this. They will help guide you and create strategies and do that. I get you a leg up because I provide you the algorithm that I have, which I use on my own portfolio to manage it. It's not just the when to buy, it's when to sell. So if you're not sleeping at night or you're nervous about actually losing stuff, this is the 4-hour algorithm. Okay, see how it gets you in and it gets you out before that big downturn. Again, 12%, great. It continued up. It got you right back in even after that downturn. You had a couple of losses. One thing that you have to know, there is no algorithm or nothing in the world that will make you win 100% of the time. Nothing. You will lose. This particular algorithm, it wins 50% of the time. 50-50. Here on just QQQ, I backtest it for 24 months. It makes you 62% on QQQ. If you just bought and held, you're up 59%. Again, even with this downturn, you're still up 59% over 2 years. I don't think this is something to actually lose hope on. But if we look at this, look at last year, I said, hey, we're probably going into a summer where it's going to be a little bit upper left to lower right. And that's where the 50-day moved. And your 50-day is still moving positive. I think we still have some downturn. So again, the 4-hour algorithm, if you're scared of this stuff, you can take a look at it. Now, something that's providing us a little uplift today, I don't think it'll last long. U.S. GDP speeds up to 2.8% growth in Q2. That is a lot more than expected. Accelerating. That is huge. That took the market up, and it was about even. Now it's selling off a little bit again. People realize that, hey, we're going to make this move out of big tech, and what happens is when you make that move out of big tech, it moves these indexes. So you're going to have these things taken down. Now, what can you do about it? Well, you've got to take a look at the markets, okay? SPY closed at 50-day. We can look at SPY. This is what I want to look at, and I want to look at the daily. So again, we're using charts, and I'm going to try and explain this with charts to tell you exactly where we're at. This is the 4-hour. I pointed out that the next biggest support level is 436. We're not there. We're at 541. I think that next support level kind of holds if you go to the daily. Okay, this is what a lot of chart people use is the daily. We closed right at that 50-day. That blue line that you see is the 50-day. Your Bollinger Bands, they're expanding, but you're on the downside of the 9-day, which means you don't have confirmation. And that 50-day is still moving positive. You close there. Do we have a chance to go up? Well, let's take a look at some of the other indicators. Your MACD is still going down. Your RSI is only at 41. That's in no man's land. Doesn't mean that we have a chance to go up. It just means that it's in no man's land. It doesn't tell you anything. The MACD, super high over the oscillator. It's got to reset. I've been saying this. It's got to reset on the daily, on the weekly, on the long term. It's got to reset. So if you're playing longhand, it's probably 2-to-1 in the 210 inversion. Now, what I'm going to point out, I'm going to push this out in the newsletter. If you don't have the newsletter, you should sign up because today's newsletter is going to be a gem. Here's the newsletter. And by the way, for all the paid subscribers, Tesla, I saved you. If you had Tesla and you didn't get out with me, I posted it in this newsletter. I didn't think it was worth the risk. There was too much expectations, not enough catalyst. And I said, honestly, it could go either way. I don't think it's worth the risk to buy the stock before earnings. If the stock tanks, it'll be a buy again. As we've seen, it can hold strong. Even through its extended valuation. If the stock blows away and pops, that 263 would turn to support. I think you could easily play leveraged ETFs on this. TSL is long, TSDD is short. I didn't say buy it. I didn't say hold it. And I said up here, there was a reason I sold at 252. There was a reason I sold it. I still have big exposure in XLY. And I held that through the earnings, and I'm still holding that one. I still think that, XLY is the best exposure to Tesla without owning it individually, because I think this one is particularly volatile, and I want to own it based on the 4-hour algorithm. And that's it. But the 210s, so how you look at the 210s is you go to Seeking Alpha, and you go to market data, okay? Market data brings up everything that you need to see in the market. And you can see U.S. equities. You can see U.S. sectors. I can go over here to bonds. Now, typically what you want to look at, remember the bond market affects the equity market. So the 210 inversion, what that means is that 2-year is at 4.41. The 10-year is at 4.25. That's as close as it's been. It extended yesterday. So I'll post exactly what it did yesterday. You can see it extended that inversion. That usually means that you're either heading into a recession. Again, it's been the longest inversion in history, and nobody's really talking about it. But that was key. The other key was the VIX. And I've gone over the VIX before, and this is the VIX. Again, in Seeking Alpha, you can look at this. The VIX at 13, it was telling us it's too low. You can look at the 10-year average of the VIX. It's too low. In these high-flying, high PE times, look at 2020, where the VIX, how the VIX is calculated, it's calculated based on options that are outdated. Okay, so it predicts the future. And this just told you, hey, it's super low. And could it go lower? Absolutely. But when you look at this 6-month chart or even year to date, let's look at year to date. It's telling you, hey, it's too low. Look at where it was in March. It was up at 14. We were down here at 12. It's too low. I do think when you go at this 5-year mark, I do think we get to 20. I think you get to 20 on the VIX. And that is significantly higher than we are now. It's at 18. That's a 10% move. That's going to be a big one. How can you play this? You can play this with UVIXY and SVIXY. Those are two stocks that are tied to the VIX. You can play them. They're triple levered. But for me, I look at the VIX and I say it's too low. It's going to get to 20. And that's when we'll probably even off. And if the VIX gets to 20, that's when I'll feel more comfortable getting into this market for the long term. Okay? The VIX was telling us exactly where it was going. Now, you can look at this market data as well, because the key market data, this includes your U.S. equities, and take a look at small caps. So what you want to take a look at is the S&P down 2% yesterday, NASDAQ down 3%. But look at those two. They are up year to date 13%. Now the mid cap, they were down 2%. They're up 7%. Everything is positive still year to date. 1 month, your technology sector, take a look at the sectors. Your technology sector is down 2%, but it's up 12%. You know what's number one? 14% communication services. Slowly, financial services, the XLF is up 13% year to date. Okay? The year to date is what you want to look at. The 1 year even points it out further that the technology trade probably has more to go down. Communication services probably has more to go down. They're up 22 and 26%. So don't cry because you lost yesterday. Be happy because you made so much money over the last year. Again, this is part of the whole process is you're going to lose on certain days. I don't think there's anything playing against you, but I'll point all of that out. Now, what I want to do is I want to point out to you guys exactly how the 4-hour algorithm helped. Look at Apple, okay? Apple, it was clear. It got you out in the 220s, I believe. It's at 218 right now. Let's see. It got you out at 227. Nice 32% gain. We can look at that one. Amazon, this one, I think it got you out at 188, 187, somewhere around there, right around that support line, which is broken down. Has no more support at 188. It's down below that. It's held it below that. That now turns into resistance again. If we go and we look at the weekly, remember, that's the key. We broke through it, but we haven't held it. It's got to hold it for a certain amount of time to feel more comfortable that that's support. Right now, that's still resistance. But in my mind, this is a $250 stock. But if you get nervous about this stuff, the algorithm got you out. You could have absolutely at all-time highs there, 197. If you were nervous and the algorithm told you, take the 8% gain. Get out there. Now we can look at Google. Google was down, 5% yesterday? By the way, that quarter on Google was fantastic. I think what I take on it, my take on Google, and I wrote in the paid newsletter that I thought Google was a good buy at a certain point in time when it, after its earnings, because it will either tell you, hey, we're rip roaring, or it's going to crash. And either way, you want to buy this one after the earnings when the 4-hour algorithm gets you in. But I think those earnings, I think it's a pretty, I read one analyst and it was, hey, Google's ad revenue on YouTube, which is why they got pulled down yesterday. That was 100% the reason. The quarter was perfectly fine. They're spending a lot of money. But the reason Google's ad revenue was down was, I think they, and it's going to need to come out as Comcast earnings have come out, and Peacock, you saw a little boost on their ad revenue there. I think you'll see a little boost in like the Amazon ad revenue. But those places that don't allow you to skip ads, I think ad dollars may be going there instead of YouTube, because now there are other places to actually target users online. And the universe has become bigger than just YouTube. YouTube still has the lion's share of the online ad dollars, but I think it's starting to chip away a little bit, and that's what got investors nervous. If you don't want to, you make 46% on this algorithm. You win 38% of the time. Your average win 8%. You could have gotten out with a 2% gain right here at 185. Now, do you want to buy at that 174? Absolutely freaking not. Your 171 is support. You want to make sure that it holds that. You want to buy in an uptrend, not in a downtrend. The MACD, it's low. It's below its oscillator. It is an oversold stock at 30, but the valuation is still a little bit stretched. But again, I'm pointing out, the algorithm kept you out. Microsoft, let's go and look at how the algorithm performed on this one. Well, you had that $430 support level that I outlined. The algorithm wouldn't tell you that, but it got you out here at 455 with a nice 6% gain. Algorithm makes you 47%. If you buy and hold, you make 66%. But I'm pointing out that if you can't sleep at night, the algorithm tries to protect you. Now, the MACD, below the oscillator, stock is completely oversold right before earnings on July 30th. Do you want to buy this one? Well, it might be a little bit of a risk. In my mind, Microsoft is a nice buy and hold for 5-6 years. I don't think there's a problem. It is a little bit expensive, but I think they're leading the charge on monetizing the AI stuff with Copilot. If you don't use Copilot and you have an Apple iPhone, just download Copilot. It's GPT-4. It's awesome. But Microsoft, it got you out. NVIDIA, we can talk about NVIDIA. This one was down, 10% yesterday? It broke down below that 122 for the first time. Now, the algorithm got you out here, 8% loss. But over 2 years, you make 508% with the algorithm. You win 61% of the time. When it gets you out, you listen to it, because you win 61% of the time with an average win of 25%. If you're winning that much and the algorithm only makes you 508% versus buy and holding makes you 608%, it means those downsides are not that long. So in my mind, and this is going to be a key, I'll bring this up. This is the last one. They report on August 28th. That's going to be the make or break. Are we in an AI bubble or not? If NVIDIA comes out and says, we've heard from we're going to take our future revenues down because we don't expect them to spend as much, that is going to be the end of the AI bubble for NVIDIA, for SMCI, for all of those guys. So I'm not predicting that. I am predicting that they will blow away earnings because Google spent a bunch. You're going to find out how much Meta spent. You're going to find out how much Amazon spent. You're going to find out how much these hyperscalers have actually spent on AI with their earnings. So when NVIDIA comes out, it won't be a surprise how much they spend. Now, it's going to be a surprise with how much NVIDIA actually projects. And I've said it before, if you don't beat and project higher, you're going to get killed in this market. But, SMCI, we can go over SMCI in the 4-hour algorithm. This one got killed. It's at 702. We have traded completely sideways since April. You had a nice run from April until May in every other major stock except for SMCI, and you're just trading sideways. Now, the algorithm got you out here at 866. So if you're nervous about it, get out. The 4-hour algorithm does give you some type of protection there. And again, if you want this, it comes when you sign up for Trendspider. Now, I have a note. Google Cloud spend is what shocked the market, and like Meta did last quarter. Now, Meta, their earnings are coming up. They're up 0.86, under $500. I think long-term, that's a fantastic buy. July 31st, they announced earnings. That, algorithm got you out yesterday. The algorithm makes you 105% over 174% over the last 2 years if you buy and hold. That's back tested. That's actual fact. That's not opinion. Apple, by the way, as far as Apple's earnings come, next one, there's a report out. This one, Apple's iPhone shipments in China see a dip in Q2 while Huawei phones soar. This could be an issue. It could be a mixed quarter from Apple with good news and bad news. The good news might be, hey, our revenues are up and we're finally growing. And we'll look at this a little bit here because I do want to look at Apple. If you look at the valuation and you look at their, it's C's, it's D's, it's an F. It's not great. I mean, it's just overvalued. The key point is when you look at growth and you look at the revenue growth year over year, it's down 0.9. So say 1%. For a company with that valuation to be down 1%, that's hard and that's not good. I think they're going to actually start growing revenue. But the bad news is I think they're going to actually have less dominance in the market in specifically China. And that's going to be hard because China was their growth factory. India has now turned to their growth factory, but India's economy doesn't have the support of luxury goods like China's does. And China's seeing a real problem. Don't get me wrong. They're seeing a real problem in their economy. But with Apple, again, it's a little bit hard. So I like this one. I still hold this one. Am I going to trim on this one? Probably. I mean, it just doesn't make sense when my support level is still 200. Doesn't make sense not to trim at this 218 level. It just doesn't. Now, my average purchase price is somewhere in the $5 or $10 range. So I've got plenty. Do I mind selling at 218 and then buying again at 230? No, it's long term. Again, it's long term. Look at that golden cross. If you just bought on this golden cross at 188, you did great. You didn't have to buy at 169, but that golden cross with the 50-day going up there were signs that this was going to be a good one. The rally is over on this one. It could get hurt by earnings. Am I panicking? No. So, Tom Lee says small caps could rise 15% in August. So I watched his interview this morning. I don't have a link to it. You can find it wherever you want. It was on CNBC's Squawk Box or whatever show they have on. But he was on there. What he was saying is this rotation will continue through August, and he thinks IWM will go up 15%. Well, IWM, the algorithm got you in at $200. And I said that I thought that was a good buy. I didn't think it was a great buy. We were going down on the 50-day. When was it a good buy? It was here at 208. You had confirmation. You got back over the 50-day over there. You gapped up. You've been going up. You've been going down. You've been going whatever. Weekly, we take a look at the weekly chart, and you're seeing it broke through that 212. That's where I got the 212 support level from. We broke through there. It's still support. Until we break down, it's still support. You're trading right now in pre-market. It's at 219. I think your resistance level is 244. But he thinks it could go up 15%. And that's Tom Lee. I mean, that's the permable. The correction happening in stocks is far from over. Interactive Broker says investors expressing disappointment in the quarterly financial updates from Tesla and Google. They're seeing it go down. Again, Interactive Brokers has the best insight as far as what comes from traders. They're the largest trading platform of active traders. So, biggest stock movers today, Chipotle. We'll go over those earnings in a little bit. It was interesting, to say the least. The price action, I do want to look at it after hours on that one. Unilever gained after reporting underlying sales growth. ServiceNow climbed 6%. Software is back in after its downturn. Looks like software is coming back. Ford plunged 12%. This is Jim Cramer's favorite. I'm sure Jim Farley probably texted him and said, we're doing great. We're doing great. Serve Robotics. This was an interesting one. I had this note in here to look at. Oh, I do have to tell you, I bought CrowdStrike on Friday. I bought CrowdStrike at 305, somewhere in that neighborhood. Wasn't a huge buy. It was a small buy. But at my average price target, I think my average price now on CrowdStrike is like 280 something. So I am in the red. Am I worried about it? I mean, I think we talk about any reaction in the market is an overreaction, but take a look. I mean, when you're in this type of situation and you've been flying this high on the weekly and your MACD is this high and your RSI is that hurt, you're going to get hurt. Now, their earnings are coming up on August 26th. That's going to be a make or break day for CrowdStrike because it has enough time in between that quarter that we're going to be able to have answers as to have contracts slowed down based on this outage. It doesn't look good for CrowdStrike. Let me put it this way. I love the fact that I own CrowdStrike and that they took down the world, because it shows you how embedded CrowdStrike is to this economy and to the world, and how it's just embedded in every major company that has tentacles into your life. The bad news is that there's other options out there. And so while CrowdStrike, I think, is the best platform, I think their actual integration, and it showed the weakness. So I'm not sure I'm 100% in on this one, but I still own way more Palo Alto networks than I do CrowdStrike. And that was the main reason, was I didn't necessarily trust cloud-based, software like this. And so when the update was sent out and it turned out to be code, I kind of said, and understand what they have to do. An IT person has to go into the actual files of this, of every computer that was infected, and remove that line of code so that it can actually come back up and get the new update. They can't just update the computer because you got the blue screen of death. So I did buy this one. Is it a great buy? Probably not. Will I dollar cost average? I don't know yet. The 4-hour algorithm did get you out on this one. It did protect you. I bought into this. It got you out up here. I thought that, hey, when we saw the thing move and it was in the 300s right here, I thought, ooh, it's below the MACD is below the oscillator. The RSI is at 18. It's completely oversold. What more could go bad? And then we just have the market downturn. And that's where you just got killed. So CrowdStrike, I'm a little bit nervous about it, not crazy. Serve Robotics just soared. We can take a look at this chart as NVIDIA takes a stake. SERV. This is part of, remember when we Sound, SOUN, that one surged? This is the same thing. So what I want to point out to you is this is the hype that made Serve go up. And it was up like 400%. I mean, it went from $1 up to $10. That went crazy. But if you look at SOUN, and it's the same type of thing. So if you want to know what SERV is going to do, just look at SOUN. And you look, when that hype happened, that was back in February. And it shot up. It went from $1 up to $8, $9. And now it's back at $4.54. So understand, I think Serve Robotics is going to do the same thing. It's up at $8. I think it's going back to $4. So don't go all at it. You don't want to go at it. Now, this was also from last week. Here's the highest price targets for the Magnificent Seven. Apple 300, it's trading at 200. Microsoft 600, it's trading at 400. NVIDIA 200, it's trading at 110. Google 240, it's trading at 170. Amazon, it's trading at 180 and it's at 250. Facebook 634, it's trading under $500. Tesla 310, that's trading at low 200s. So you still have way more room upside for the bull case. The down stuff, you want to buy when it's down, but you don't want to buy on the slide. You want to buy when it's actually in an upward trend. Yesterday was the worst one-day stock slide for QQQ since 2022, which was the bottom and the start of a huge bounce. And I want to go back and I want to point out QQQ, because I pointed out how I think this year is going to be the same as the last couple of years. So if we go back and we look, again, this was the biggest decline, single day decline, was back in October 2022. So here you look, 2022, we were in a downturn. And then you had this nice June, July upturn, only to lead to the October lows. Okay, the October lows down there. You had a nice little bump up into November. You went down into January. And then you soared and you went up all the way till July. And then you traded sideways. Then you had the October lows. Okay. This doesn't look as dramatic as it felt. It felt bad because you finally got up and you thought you were going to break through these previous highs, but it felt bad. It doesn't look as extreme just because 2022 was that bad, but this felt bad. So then what do you have this year? You go into this year and you had this April downturn, and then you have this nice summer rally into July. And into August, what are we doing? We're seeing weakness. So I think you're going to see sideways to down on this. That's just, again, look at the weekly MACD. It hasn't crossed down yet. Look at the RSI. It's still at 55. You're coming off of 73. Is this a shock? No. It can't go on forever. So traders pause for the breath after Wall Street wipeout. What's next? I think, again, do you want to change the direction of your portfolio? In my mind, no. I'm not changing the direction of my portfolio. Am I going all in on IWM? No. Will I buy IWM? Yes, I will. I want to make some money, but the large portion of my portfolio is long term. I talk about it all the time. Probably not as much as I used to, but the 40-40-20 portfolio. 40% of my portfolio, I don't ever freaking touch. That's Apple. I mean, that's, again, it's a large percentage. 40%, I check in every 6 months, maybe a year. 20%, I'm actively trading. I'm actively managing. That means if that 80% goes down, I'm losing money. 20% can't make you enough money of your portfolio, can't make you enough money that it's going to protect you against an 80% of your portfolio going down. And that's just the nature of it. You're going to lose some money. And my personal opinion, that's the way I've managed my portfolio for years, and I've been fine. Probably not the best use of capital. There's probably better people out there who manage their capital better. But again, I'm just trying. The whole purpose of this podcast is to make you think. We all have different risk tolerances. Some people can't do what I do. In fact, I have a couple of friends that texted me yesterday. God, why didn't I get out of QQQ at the top? It's because you don't want to. QQQ is not something you trade. QQQ is something you own. And that's the way I view it. If you wanted to trade it up there, go ahead and trade it. Learn the skills that I have and trade it. And if you want to learn the skills that I have, again, it's all right here in the newsletter. I put up a nice, very nice, education section where I go over everything that I do in my portfolio. That education section has everything that I do in my portfolio as far as the strategies go. It has how to trade. It has how to manage the portfolio. It's everything that you need. So again, I think it's a good one. Now we talk about, it's an AI market, but it's also a GLP-1 market. And Viking Therapeutics, I've talked about this one. It's up 13%. Sends Eli Lilly lower as obesity drug enters late stage program. This is the pill. Late stage trial for its obesity candidate. Viking Therapeutics, it has been on the rise. It's at $57 right now. VKTX is the symbol. And again, we're in a GLP and an AI market. I don't think GLP-1 is done. You have to pick your winners on GLP-1. Is Eli Lilly a loser? No, it's at $847. It's under $900. We'll look at that chart in a little bit. Now, Viking Therapeutics, this one in the 4-hour algorithm, it makes you 1,000% over 24 months. You win 42% of the time. It got you out right here. It will get you back in on today's candle. Do you want to get back in? Well, the 50-day is down below the 200-day. Okay, your 200-day is still up there. I would argue it's a little bit expensive, but they're entering late-stage trial. Here's what I know about biopharma stuff. Okay, I don't know much about healthcare. I don't know much about this stuff. The one thing I know is as they enter late stages, that's fairly good, but there could be a hiccup. And so that's what I want to point out. It's strong buy on Wall Street. The quant says buy, but I want to point out this could get a hiccup and you could easily go back to 95. Now, your average price target is 112. There are 12 analysts that cover this. That's a huge price target. Again, you're seeing this one slide off of 100. Does it have 100 in it? Probably. The valuation's not crazy. If they're not making money, understand they are not making money. And that's the problem. But the second they get some type of obesity drug on the market, this is all of a sudden $1 billion company. Right now, it's got a market cap of $5.56 billion. That's easily. You can look at Eli Lilly. Eli Lilly has significantly more drugs than these guys. The market cap of Eli Lilly, you're protected by the library of drugs that they have, but the market cap on Eli Lilly is $774 billion. So, Viking Therapeutics, small company when it comes to biopharma, but That huge growth potential is what's taking it up. And so that's what, you want to keep an eye on that one. If you want to invest in it, I may put, a couple $100, a little bit into it. I do like the way that one's going because, again, they've gotten approvals to go into more stages. It's just not something that I'm comfortable putting a large amount of money in because I just don't know that sector. NVIDIA and Qualcomm leads, chips down. I think chips will have a tough go into August. Honest to God, that's going to be your tough one. Chips are just going to be tough. And it's because they're up so much. That's the problem. So watch your chips. If you have SOXL, if you have that stuff, I'd trade it on the 50, on the 4-hour algorithm, and 65-minute algorithm, whatever you want. Let's go over earnings, okay? What I want to go over is Chipotle. They killed it. Margins improve, peers gain, okay? They killed it. They haven't had to go to value meals. This is the one restaurant that doesn't have a $5 menu. They don't have a, $7 burrito for you. They don't have a $4 bowl for you. They saw an 8% growth in transaction. Per transaction, 8% quarter over quarter. It's a crazy good quarter. This shows you beat and raise will be rewarded. It was up 14% yesterday after these earnings. Then they went into the call. And the CFO said, I will quote, "Our margins may be under pressure going forward." That's a small portion of the quote. He went into more detail about it. You're seeing this one slide, the $5, again, the $5 menus. It hasn't affected them, but you're still seeing it slide. Algorithm, you're out. But what I want to do is I want to show you the after hours move in this. And I want to go into the 5-minute, and I'm going to show you the after hours move. Look, this was at $59. Okay, that's a big move from 51 to 59, 14%. And then the CFO comes out and says our margins may be under pressure. Look, it never gained confirmation. It never regained that pop. It never did. And so this market is unrelenting. If there's any indication that it's going to go down. Now, ServiceNow, I think software's back. This one, ServiceNow, let's see, they're up 10%, $806. ServiceNow, even now, it makes sense to buy. It's on its path to a mega cap. I mean, that's the analysis that this one has. I think ServiceNow, they touted AI. I think this points out we're still in an AI market. They point out AI, and it just popped. I mean, it just popped. Ironically, algorithm got you in here at 763, got you out today. Probably shouldn't have, but just sometimes the algorithm, and it didn't get you out with a loss. It's a gain. It just calculates on the price beforehand, the open before, and so that's kind of a mistake. It's just a charting thing. It's the back testing, but it's you make 12% over 2 years. Now that includes the 4% loss, but you're not losing. If you got in based on the algorithm, you're not losing. Now, you win 34% of the time. Your average win is 8.29%. I would say that this one's going to get you right back in. Your MACD isn't super high. Your RSI going into overbought territory at 65, 66. But that's an interesting one. New York City Bank. I know this one comes up on my scans a lot for the NASDAQ. And what's interesting about this one, I wanted to point out New York City Bank Corp, non-GAAP earnings per share, $1.05, misses by 62 cents, and revenue by 671. This is what a large portion of the IWM is. It's small, it's regional banks. And so this one missed by a lot. I mean, by a lot. It's getting killed in pre-market. In the market. It's down 11%. But what I want to point out is the tangible book value. The tangible book value is $20.89 or $18.29 fully converted. That's the tangible book value. It's trading at $9. There's a problem. Again, they're losing money, so that's a huge problem. But their tangible book is huge. And so when you look at banks, I've always been taught tangible book is what you want to trade on. And if it's trading below its book value, you buy it. That goes long standing. I don't know if it's the right call, but I wanted to point it out because New York City Bank does come up in my scans a lot. Now, tonight, what I want to look at is 3M. 3M earnings are actually coming out tomorrow before the quarter, and I think this one's interesting. 3M might be interesting because look at this one. Reported $2.39. Their estimate for this quarter is $1.68. Reported revenue, $7.72 billion. Their estimate is $5.86 billion. Okay? This one has been in a slide, and it's a company that I'm not sure I really like, but they do have new management, and that's a big freaking deal. When you have new management and you have as good management, I've been hearing good things about this management. I forget which company the guy comes from, but Stephanie Link, I know, has been touting this one, and she's talking her book because she bought it. We had this gap. This gap got filled right here. It got completely filled up to 105. I think this one's interesting. I don't know that it's like 100%, oh my God, I got to buy it. The MACD isn't stretched. The RSI isn't stretched. Their earnings are coming out. The algorithm has you in at 104. You're trading at 102. Now on the weekly, look, it has just been horrible. You can see this line right here that I put in. I'm going to remove that line. Remove this segment right there. I'm going to move that. It's sideways. I mean, it's not one that I want to trade, but you finally started to see the 50-day move a little positive. You finally have confirmation over that 9-day. Your Bollinger Bands still wide open, but not, so much that, these were closed and it went down. They're not closed as much as I would like. MACD, it's right on the oscillator. Not crazy. RSI, 54, no man's land. I don't know exactly what's going to happen, but what I want to point out is I wouldn't buy this before the earnings just for that. I would probably buy this one after the earnings if it's good. And I don't want to, again, the valuation of this company is not crazy. It has been sliding down consistently. And there's a lot of problems with the company. They have it as a hold. The valuation is incredibly good. Okay. The PE at 10. Your sector is at 19. They don't have future growth. They don't project it. But the growth is what's horrible. It's down 2% yet revenue year over year. Profitability, fantastic. This new manager has said he will cut costs in order to bring this one back to profitability and growth. And that's what he's doing. It's a beaten down stock. It's an opportunity, but I don't want you thinking that you can buy here at 102 and then see it dip back down to 90. Because the earnings are important for this company. If the valuation is going to change, and if you're going to see it go back up to this 200-day at 137, then they're going to have to show positive earnings results. That's just it. Now, I have a little quote here from Steve Burns. Volatility comes before the fall. That's where the VIX comes into play. And that's why you want to follow the VIX. Volatility comes before the fall. So when you look at the VIX, and you see this one rising. Again, it comes before the fall. And we saw this April. We saw a bad April. Got up here to 19. Didn't hit 20. You're at 18 right now. You're up 0.1% today. Again, I think you get to 20. I think you get to 20 before this one's over. I think this is a particularly long slide that we're going to see. Social request. What do you think about FFIE? This is from Trevor on email. FFIE, I saw a video of their booths and some Amazon trucks on it. If they get a contract with Amazon for the fleet vehicles, that'd be huge. Yes. Yes. It would be huge. Trade it. Trade it. Until they get a contract, just trade it. Trevor, trade it. You can trade it on a shorter time frame. That's what I would suggest. 4-hour algorithm loses you 92%. But you lose 100% if you wound up buying it, 24 months ago. You've lost a large amount of money. The only reason this has gone up, the only reason this is in the news is a short squeeze. That's it. FFIE makes no sense to actually buy. If they get a contract, it's going to be huge. Don't bet on it, to get the contract, because if they don't get it, then you're going to see this one go to zero. Or, they could dilute you. They could say, we need more money. They're losing money. There's no reason to get into this. For long term, there's no at 35 cents, put a couple of bucks into that, maybe $5. you probably lose 4. Again, until they get a contract, there is no reason to get into this stock tracker. It makes no sense. If you want a moonshot, there are better moonshots out there. Viking Therapeutics is a good example. SMCI is a great example of what happened with moonshots. There are other companies that are better positioned, that are making money, or have the potential to make money and have far better opportunities. This is waiting on somebody else to sign a contract, and it very likely may not even happen. Remember, FFIE is great, but Amazon has so much money into Rivian, and they are producing so many electric vehicles. Why would they change formats? That would just be my question. Unless Rivian can't produce them fast enough for Amazon, which I don't think is the problem. They're expanding their plant. So, Ryder on email, what would you do with $5,000 in a brokerage account right now? I just wanted your opinion. I'd buy QQQ. Well, let me put it this way. I'd buy 2 things. It depends on A, your age, B, your expected growth, C, your financial position. Because if that's $5,000 that you have just sitting around and you won't touch it for the next 10 years, that's different than having $5,000 in a bank account and you may have an emergency where you have to spend $1,000. So there's a lot to go into this. Me, who, I do have $5,000. What do? I'll buy QQQ when it tells me to buy it, and I'll buy Bitcoin when it tells me to buy it. Because at $5,000, those are 2 things that I think have the biggest opportunity and the best at growth going forward. That's it. Do I want to bet it on a single stock? I could bet it on NVIDIA. I could bet it on AMD. I could bet it on SMCI, Microsoft, Apple. I could bet it on those. But in my mind, there's 2 things. And Ethereum, Ethereum ETFs came out. You may want to look at Ethereum. But in my mind, if you have $5,000 and you don't need that money, just forget it. But again, it depends on your age and your situation. Somebody who's 75, who has $5,000, and say their net worth is like $105,000, $110,000, $5,000, I wouldn't do a damn thing with it. I would leave it in cash, earning 5%. There is no way you want to risk that $5,000. None. Somebody who's in their 50s, who's still working, who has a net worth of $200,000, $5,000 isn't going to change their life sitting there and earning 5%. But if you put it into Bitcoin, it could be, $10,000, $15,000 over the next few years. Could be. I mean, again, if Trump decides at Nashville to say, hey, we're going to have Bitcoin as a security in this country, boom. I think that pushes it to over $100,000. Again, if you have the Fed buying billions in Bitcoin to make it a currency, it's going to drive up the price. What's he going to do? He's going to put the rest of the world into recession. That's just, my thoughts on it. But again, if he does that, I think you're going to see Bitcoin fly. And I think you're going to see more people go into it. But $5,000, I think it really depends on your situation, Ryan. It's kind of unfair because what I would do with it is significantly different what other people would do with it. $5,000 to me, I mean, I don't even start my positions at $5,000. The positions in my portfolio is typically started at $9,000, $10,000. So, I'd do a couple at $1,000 if it's a little bit riskier. But $5,000 for me, it's different than it is for you. So, and the other thing I always tell people, don't follow a douche on the internet. That's the number one rule of this thing. So, but if I were younger and I had $5,000 and it wasn't something where I need it, you better have a cushion of $20,000 or $30,000 in order to throw $5,000 into Bitcoin. You better have a cushion because those costs add up. You need to move, $10,000. You need a new car, $15,000. You need a new water heater, $1,000. A lot of those things come into play. And what would I do with $5,000 is way different. But for me, for the growth, it's Bitcoin, Ethereum, or QQQ, whatever you feel comfortable with. Sam from Facebook, Gary, if you have a chance, would you look at SKIL Skillsoft? Looking at it as a trade, do you think it has anything left in the tank? Webull has a $40 to $50 price target on it, and FinViz has $45. Looks like a lot of options being exercised. We can go and look at Skill. I will tell you right now, I don't think this company's making money. But we will take a look at it for you, Sam. Skillshare, it looks like it's gone on quite a run. I mean, that 50-day just crossed up there, still holding at 17. We can look at a long-term. I mean, do I want to put any money into this as a trade? Trade it on the chart? Do I think it's got some left in the tank? I mean, SKIL here on FinViz. We'll go and look at FinViz since you did. It's not making money. I mean, they're losing $332 million. They have cash $18. Let's see. What's 18 times 8?
It's 144.
So they're losing $332 million, but they have $144 million in cash on hand. They're going to dilute you. That's what they're going to do. Price target of $45. Look at where that was, Sam. Look at 2021, 2021, 2022. There's nothing that says right now it's a $45 stock. There's nobody that covers this. And then you look at this options exercise. Yeah, that typically doesn't mean a lot. It just means that they're adding the stock at this low price to their actual holdings. But the cost was zero. So anything above zero, they can sell these shares. That's all that means for an executive. That's all that means. So take this chief financial officer. He exercised 5,390 shares. He got it at zero. So all he had to do was say, hey, transfer 5,390 shares at $0 to my account. It's counted as income, but it's $0. Well, no, I'm sorry. He will have to account for that as income based on the share price, but he got it at zero. So it's based on a bonus at the share price. So he's just paying income tax on it. That's it. Or he could, there's some ways that you can move it into a retirement account too. There's financial manipulation that can go on as well. Honest to God, we can go over here and we can look at SKIL on Seeking Alpha. I think if you trade it, have at it. I just personally would not put any money into this one. They're not making money. The valuation A-. Let's see. Because of their EBITDA, stuff like that. The growth, D+. I mean, the revenue is declining. How are you going to make, if you're not making money and your revenue's declining? Doesn't make sense. Momentum's an A. Wall Street, when it says buy here, careful. 3 analysts cover it. 3. And we saw they haven't, changed anything in the last 90 days. Revision C-. 1 up, 2 down, 0 up, 3 down. Sam, there's better places to put your money. Way better places to put your money. IWM. Just put it into IWM. Now let's talk about scans because, there are some stocks that are showing some bullish tendencies. We'll go over a couple of them. PARR. This is one. Got a cross up. Would I invest in this one? Probably not. It's another one. It's Par Pacific Holdings. I think this is energy. This is just one, again, bottom upper left to bottom right. Do I want to buy at this 23.86? No. Algorithm makes you 67% over the last 2 years. You make 60% if you bought and held. Again, that pop right there to 40, that's your resistance. I mean, it's clear resistance. If you go and look at a weekly, this just looks like it went into weakness. Now, $21, probably a support down there at the 200-day. Probably not a horrible one to buy if you believe in this one. Again, do your own research, but PARR. One sector actually crossed up and has a buy in the algorithm. That's XLV. This is healthcare. This one's been trading sideways for a very long time on the weekly. It hasn't been rising steadily, but you got this initial buy here at 145. It's got another leg up. Again, the all-time high here is 151. Am I buying this one? No. But I'm looking at the healthcare sector. You can go over here and you can type into Seeking Alpha, XLV, and you can kind of look. I think the number one holding is United Health, and that one has just been on a tear. It's Eli Lilly, actually. United Health is number 2. So those are two good stocks. Johnson & Johnson was up yesterday. It was the top Dow stock. It's up 6%. So, again, there's opportunities out there. Another one that got to cross up, Schwab. I love Schwab. I love Schwab for the long term. They had their earnings. The catalysts are over. You saw the downside. You're probably coming back up to the 200-day here at 72. Financials are super, super strong. $65 was your buy-in. It is up 2% today. Schwab, again, Duke Energy. I think this one's a good one. Utilities was the only sector that was in the positive yesterday. And utilities killed it. Again, Duke Energy, it's going up. It was a buy at 100. Right now it's trading at 109. The algorithm had you in. You're about to get that golden cross. If you get a golden cross on this one, probably 120. Duke Energy, we can go over here and look at what the price target is from Wall Street. And this is how you use your tools. There's nothing that I'm doing that I'm not showing you out here. The tools that I have are the tools that I use. You have to get tools that you're comfortable with. Average price target 108. You're trading at 109. So it's typically traded at up to there, and then they move the price target up. But it does seem to bounce off. So you've got to take a look at the valuation if you want to do that. There's some other ones that I like in the utility sector a little bit better than Duke. But what I want to show you specifically, if you've made it this far and you're not signed up for Trendspider, this is what I want to show you. I don't know small caps that well. I just don't. I don't like them. I don't do them. But what I will show you is this is a scanner that I have, okay? It's the Daily Stock Pick Scanner. It shows you what's bullish in the 4-hour algorithm. Now, you can scan on absolutely any list that you want. Trendspider has a ton of them. You can create your own watch list and scan against that. This is the power of Trendspider, is it saves you a bunch of time. You don't have to go searching for charts. The scanner finds them for you. You just put in what you're looking for, what technicals you're looking for, what fundamentals you're looking for. ChatGPT, you can write all of this into ChatGPT and it basically creates the search for you. But here, what I want to show you is you can do this against the Russell. Okay, IWM is the Russell 2000. I don't like the IWM because it basically, 60% of it is unprofitable. So let's just look at the Russell 1000. And let's scan on the 4-hour algorithm what has an entry in the last candle for right here, RJF. I mean, we're just going down Raymond James Financial. Financial's been doing well. This one bounced up. Got a nice cross up on the MACD below the oscillator. Your RSI is at 54. It's not quite there yet. You got a gap up here to 120. Looks good. DPZ. This one is Domino's Pizza. We got killed on the earnings. Their earnings are done. They got killed. You got a gap up here to 471. Any reaction in the market isn't an overreaction. Could you go back here and fill that gap? You could. Again, opportunities in the market. BMRN, Biomarin Pharmaceutical. This one's been hanging around the 200-day. It's just above the 200-day. You had your golden cross of the 50-day. Are you going to fill this gap up to 90 from 85? You could. CAG. This is ConAgra Brands. You just crossed your 200-day. Your 50-day starting to move forward. So what I want to show and point out is, CCI. This is a company. It's up 3% today. CBRE. This one's up 9% today. 9%. MOH. This is on our watch list. This is up 13% after earnings. So, again, Trendspider not only allows you to chart against this stuff, but you look at this list. I mean, this list down here at the bottom, you may not be able to see the whole thing. Everything's freaking green in the Russell 1000. Everything is green. Up 3%. HII up 4%. CFR up 6%. MORN up 6%. GILD, Gilead. This is up 4.5%. Is it at its top? No. ServiceNow is up 11%. This is in the Russell 1000. STZ. This is Constellation Brands. This is up 1.5%. You can look at Schwab is in this list. SF. which is, let's see, Stifle Financial. This is up 2%. You know, and as I scroll down, VKTX is in this list. It's up 24%. Again, it has a buy in the 4-hour algorithm. You can take a look at that. But this is the benefit. KNX up 11% today. This is the benefit of having a tool like Trendspider, is you can find those stocks that are showing bullishness. And if you don't know anything about small caps, well, let me go and look at this stock, KNX. We can Knight Swift Transportation. And we can say, go over here and type in KNF. You can do your own research on this stuff. You know, it's a strong buy from Wall Street. Wall Street's price target, 91. That's still 17% upside. We can look at, you know, the quant has it as a hold. Wall Street has it as a strong buy. Quant has it as a hold. Why? Well, growth, you know, but it's up 12%. That's because of their killer earnings. So you can look at it. You know, again, you use these things to your benefit, but Trendspider is not just, oh my God, it's a great chart. Trendspider has all of these tools that you can do. So again, if you want to sign up, everything's on the link tree. You saw me go over Trendspider just now. Seeking Alpha Premium, that's the other one that I'm an affiliate with. You get $25 off your membership, free 7-day trial. So you can use that. That's the second link on this. And say you're just bored. I don't know why you're listening to me, but say you're just bored and you want a hand-picked set of stocks. That's Alpha Picks. Alpha Picks, 132%. Okay, this is through July 24th. 132% on Alpha Picks versus 46% on the S&P. This has a ton of those small cap stocks. It has large cap stocks. I think Meta's in there. I think Google's in there. There are SMCIs in there. Abercrombie and Finch is in there. MOH, we went over that one. That's up 13%. That's in there. Just a killer portfolio. And how do you do this? Well, you can buy 5 of the strong pick stocks where they're strong buys right now. You can buy the entire portfolio. I think it's like 20 something names. Say you have $1,000. You just put like, $50 into each one. And that's up 132% over 2 years from July 1st to July 24th. 132%. So if you just want the handpicked stocks, that's the third link on Linktree. Use my link and you save $50. And say you don't have a charting tool and Trendspider is just too expensive for you, join Webull. Webull has a great desktop software program. Sam pointed it out that they have a price target on SKL at $40 to $50 price range. I think that's crazy. But, again, Webull provides you some of this stuff for free. So throw your money into Webull. I think it's got the best mobile trading platform out there. So if you want my newsletter, it is down on the 5th one. That one is free, 100% free during the week. I do have a paid one after on the weekends. So, and I'll get you another paid one. I think with the Tesla and Google, I gave you guys a paid one, but I didn't give you a very good one this weekend. I had gone halfway through it, but I needed to edit it. I didn't like the way that it looked, and I just didn't have time. So my apologies to that. But I've gone on for an hour. It's an extended version just because I've been gone. I'll have another one tomorrow. We'll wrap up. As of right now, if we go over and we look at the markets, the NASDAQ, the Dow Jones is up 0.32. NASDAQ is down 0.34. I'm sorry, NASDAQ is down 1.1%. S&P is down 0.34. Crude oil, Bitcoin, if you go to market data on here, we can go and see where the small caps and the look at the mid caps are up 1%. Small caps up 0.6. You're getting the rotation. That's all this is. This is the rotation out of big cap tech into the small cap. I'm not changing my portfolio exposure. I am going to sit through this. I will probably lose a ton of money, but I will get some exposure to those small and mid caps. I won't go micro cap, but I'll go small and mid cap. And if you want the symbols, it's MDY and IJR. That's the mid cap and the small caps. If you want value, you want growth, you want quality, you can do those. It gives you all of these things. So you can go and look at this. Again, this is Seeking Alpha. Any questions, hit me up. I'm available anywhere. Okay, see you, bye.
Every morning I wake up to the sound of the trading bell.